Okay, welcome back to another video. This is the 8th one, I think, on the series, but we're actually changing topics today, looking at some more technical analysis terms. So I think these videos might be slightly boring for someone who doesn't necessarily want to trade or doesn't know too much, because it's going to be a lot more technical. However, some people will definitely enjoy it. Charts are basically the backbone of every trader's strategy, and in this episode we're breaking down the different types of trading charts and how they can transform your analysis. Might be Renko, I can't actually pronounce this, but it's Heiken, Ashi, or the classic candlestick. Starting with a candlestick chart, for the most popular and versatile option, they show open, high and low prices in a simple yet detailed way. Bullish candles close higher than the open, while bearish candles do the opposite. This is a very easy way to recognize a trend within your charting. Candlesticks are perfect for spotting trends, reversals, and price levels. However, they're just the beginning, really. Renko charts, these focus on purely price movement, ignoring time altogether. Instead of candles, Renko uses bricks that form only when price moves by a set amount. This makes them perfect for filtering out noise and highlighting key support and resistance levels when charting. And we've got Heiken Ashi charts, which smooth out trends for clearer signals instead of showing raw price action. The average data to create a cleaner flow. The downside is that they lag slightly, so it's better for confirming trends rather than making split-second decisions. Each chart has its own strengths, and the best one depending on your strategy. Experiment with these formats to find what works for you. If this breakdown did help, drop a like, subscribe, and stay tuned for another episode. We're going to be going through some more technical videos in the next future ones coming. Cheers.